I think we are good to go now, guys. Oh, I got a blue jacket on. This is looking a bit funky. All right, let me make sure everything's working. Yeah, you can see like I got some fuzziness here. All right, let's make sure everything's working on this end over here with the computer. Yeah, you can see what I mean by it looks funky when I switch over to the chart. I just got to zoom out a little bit. I was doing the thumbnail thing. Yeah. You can see like the top of my head goes transparent a little bit because of this thing. Alrighty, hello everybody, I'm your boss, Joe Boss, and welcome to another weekly trade plan. So, I listened to a few trading podcasts. I'm subscribed to so many trading podcasts and YouTube channels and analysts. And a lot of people from, I'm talking institutional professionals. And by the way, let me know if you can, yeah, Semaphore, let me know if you can hear me in the VC. Some, see. Anyways, to continue it on the thing. Oh, okay, perfect. Yeah, and also, well, great. Nice to know that the events on Discord are now working again properly. I'll go ahead and make sure I do a proper screen share as well. And that should... Come on, Discord. Give me the screen share option. Technical stuff. Come on, Discord. Share my window. Let the people see what I am doing. Okay. Well, I'll just continue with my story in the meantime while it does its thing. I've figured out, hey, if I want to actually know what people have been thinking over the last week, because a lot I've heard murmurs like, hey, I don't actually know what's going on. We got news that was pretty bad. Things are still looking pretty bad when it comes down to Iran. Why are things suddenly getting good over here and then bad again? Overall, it was just net a conglomeration of different, not necessarily excuses, but pain points as to why was it so hard for a lot of people in the last week to actually do well. I mean, you can even look at something like the ES. And I believe Alt-H, no. There we go. Very good. You can even look at something like ES, and a lot of people got tripped up over here from this rally. And they were expecting some bearish moves. They finally started trying to hit some shorts around here. And we got these big fat bottom wicks. And it's not just this equity market. You can actually look at maybe the dollar index, and you can see dollar actually traded perfectly in line with some expectations. If you were dollar bull, this was the spot to hit if this was where the low for the week came in. Look at where all the dots are. You can see the distribution peak right there. I know you can't see it, Sema, but there's also a link to the YouTube on in the... Yeah, I can't... Let me see here. Maybe if I just straight up. Yeah, I'm having now issues with Discord actually letting me do my screen share. So that kind of sucks. Let me go ahead and load up another equity market while I forward you some of the live stream. There you go, my man. But I'm going to keep this. So for some reason, I can't do a screen share, which kind of sucks. But at least I can't do a screen share in Discord at the moment. But towards the end of the stream, once we go through the 5 central banks that we're going to be going over, once we do the trade plans for those, once we look at the net expectations for those, we'll go ahead and start bringing people into the stage and I don't know, asking some questions probably about some of them. So I was to say, hey, there's a lot of people who are having problems. I listened to some podcasts. I read some reports from some institutional guys, a lot of institutional guys. Hey, nice to see you, Sema. Okay. Yeah, it's just so many people have had a hard time from professionals I trust who have done really good work and really good analysis that I read frequently. They've been getting hit a lot on a lot of different assets. The volatility and how strongly directional things have been was not, you could say, totally accounted for across the board for every asset. it's just it was a very confusing last, especially couple of weeks here for a lot of traders. And I'd say it's probably going to be a bit confusing still because people want to understand exactly what the impact from all the stuff going on in Iran ultimately is going to be. You know, the Iran commodities crisis. Are we going to see an actual significant follow through in higher inflation and a significant follow through in lower growth? Because based off of whatever country you're looking at, I mean, if you're looking at Germany, you're probably going to see one thing. However, the Germans just had a nice, really big boom because we actually got in Europe the 90 billion euro package for Ukraine passed in the European Union. So now that's going to be some money printing done, a lot of money printing done over a while here. I have to probably read a special report to properly educate myself on it from an institution on exactly what to expect, where that money is actually going, and how what areas of the European economy are going to be most directly impacted from that. So I still have to educate myself on that. But I already know it's going to significantly impact defense. I already know it's going to significantly impact all sorts of manufacturing companies all across Europe. That 90 billion euro, it goes to Ukraine, sure, but then it comes back to Europe for defense and manufacturing spending in those countries. So, but again, manufacturing is not the majority of the economy. When you read GDP, most of that, like 60% plus, depending on the country, sometimes it's 80% plus, depending on the country, is services. So we'll have to actually see how much of that 90 billion goes into services if we want to see a more realistic follow through. And then is there any lags on that 90 billion euro? So that was a big stimulatory development for Europe. And a lot of countries, like actually Australia, when it comes down to the energy crisis, the commodities crisis, which we're on right now, a lot of countries are right now still kind of skirting by. A lot of countries are still figuring out what to do, how to handle things. They're still going into their supplies. I gotta make sure I turn that down just a little bit. So things aren't absolutely terrible, but these are still insanely high commodities prices. Like having oil between $80 and $100 and staying in this range for a really long time just makes it harder and harder to justify lower inflation. We're definitely getting higher inflation. Now, I'm just gonna, so that's just a bit of background. Now with the background done, because it's important to know where growth and inflation currently lay in a country, because what I like to do is work off, okay, when a central bank is looking at an economy and they want to change their monetary policy or update their monetary policy, they quite explicitly and consistently, all of them, look at the rate of change of growth and the rate of change of inflation for their country, but also for other countries, because a lot of, if you have a economy like China that you're getting a lot of assets from, you're doing a lot of business with, you want to make sure that if they are starting to slow down, that you understand how their slowdown impacts your economy, and then that way you can better prepare for changes in your own economy ahead of time. So let me real quick, I have a little docket that I can bring up. And this is, yeah, right here. So this is last week. Excuse me. Fit the page width. There we go. So this is from my last week's trading notes. This little document here on the right. I'm working on the notes for this week today, after the stream. You know, if you guys want to hang out with me while I'm doing research and actually writing out my notes for a bit today, you can hang out with me in the Discord and we can, you know, go over some of the things that I find, discuss those things. I can point out some of the important stuff. But if you're in the trading group, you're just going to be getting these notes. I think this one was like 30 odd pages. Yeah, this one was 30 pages. This is page 3 of 30. And actually, I think this is almost 2 weeks old now, this particular report. And then the one that was technically for last week was like 38 pages. These notes get really, really long. The more assets you cover and the more opinions you read. So what I'm looking for here is just when the central banks are meeting. So you know, I want to focus on some FX stuff today, but it's because this stuff is the most high-level fundamental economic macro stuff, and all of this stuff impacts the smaller market cap stuff. So it will impact crypto, it will impact equities, it will impact commodities, it will impact bonds, debt, right? So this is the category of things that impact and change the world, that impact every single asset. So this is particularly important to stay up on, and it is FX focused. So I'm going to be bringing up FX charts as we go through these central bank rates. So first we have Bank of Canada. So first let's actually do USD CAD. And what we're going to do here is look over at next week, and we're going to unhide our drawings, and we're going to do this. We're going to add a vertical line, and we're going to make it nice and fat text. And this is the BOC decision. Bank of Canada decision. So this is the date. If we look over here, April 29th, this is when they're meeting, and they are expected to hold, fully expected to hold. Then you have actually, you know what I'm going to do? I'm going to bring up the new one. The one that I did last week. So then we have slightly, you know, more accurate notes here. All right, sweet. And look at that, look at tiny baby notes. Okay. And there's our central bank watch stuff. Okay. So now we have the notes from last week, and you can already see some of the odds have really changed strongly. Like this BOE expected to hold at their April 30th meeting. So we do Great British Pound Dollar. And then we go over here Thursday, that's the 30th. And we can put BOE decision. This is 88% odds. Last week it was 48. So the odds of the Bank of England holding doubled for all intents and purposes. So it's almost completely priced in. But this was for last week. The odds for going into the week ahead might change. Let's see here. A little bit of information. Wow, that was a strong bounce. That was a really, really strong bounce on the pound. It was very choppy. Not very autocorrelated. It's just flips green, green, red, red, green, red, green, green, red, green, red. When you have those constant flips back and forth, it's not so great. By the way, this thing here, this DMA, this moving average, this is something that I haven't had on my chart for a while, but this is actually a free script that I made. I know it's a bit distracting from what we're currently doing, but when it comes down to looking at choppy price action, this particular moving average is a centered moving average, and you can see, like, compared to something else, how it smooths things out and all the different features that are involved in it. It's all nice, and it gives you all these little visuals and says, hey, this is exactly how this works, and it has higher time frame offers, and here's how this higher time frame works different than how it works on other indicators, how it works in replay mode, and how it specifically does not break in replay mode. I have a high priority in making sure that my stuff works. See, when you're trying to do a really good job building indicators and you want to accept money for building indicators, you should be supporting all of the major features of TradingView. So if your indicator doesn't support replay mode, maybe you need to figure out how to change your indicator in a way so it does support it, or explicitly tell your customer before they buy it, this doesn't work in replay mode. Yeah, because, you know, there's a lot of free indicators out there, but yeah, there's a handful of guys who are really, really, really fantastic at building indicators, and I read all their code. I'm like, oh, that's such a cool idea. That's so this, that's so that. But for most scripts, when I'm reading a lot of scripts on TradingView, I'm like, oh, I'm looking at their code, and I'm like, oh, they forgot to do this, so it's not going to work in replay mode. Or, oh, it's going to break if you put this number into that setting. Yeah. Or it's going to fail silently, and no one's going to know what's wrong if you go to this time frame. It's like, if you're going to build restrictions around the things that you're building indicator-wise, make sure you communicate the boundaries to the people who are actually using your stuff. Oh, hey, Harold. Yeah, just make sure you set up the boundaries and actually communicate that, because one of the most frustrating things I find when using TradingView indicators, especially a lot of the free indicators that you want to try out that are out there, is you end up trying to customize the indicator to, like, fit your chart style, or you're kind of exploring the settings, trying to just see how it works. And then you end up breaking it, and you don't know why it broke, and it doesn't really give you a proper error. Yeah, it's like they didn't do any robustness testing. They didn't, you know. It was just things like, hey, communicate that when you're building scripts, right? But, you know, these are PineScript TradingView scripts. Not everyone's going to be, like, super on top of it. Anyways, the tangent ran over. Tangent ran over. But when I'm looking at this price action that's super choppy, I haven't had this line on my chart for a while, but I remember now why I built it. It's because it gives a very nice description of generally how price has trended up into the current point. It's done a very, very, very nice job of summarizing the actual data. It's not capturing these high and low wicks, but, you know, I'm kind of thinking maybe I need to make one for my trading group that has some kind of volatility band around it. And maybe in TD sequential indicators, a couple of really good ones what they do is they actually project what's called a flip line. And a flip line is once price crosses the flip line, the indicator will switch to bullish from bearish or from bearish to bullish. And you see how we have green and red here for bullish bars and bearish bars. You know, I don't think it'd be the end of the world to actually figure out, hey, if I'm building, if I have a moving average, what price for the current bar, what price needs to be reached for my moving average to start trending upwards, and at what price does my moving average need to be to start trending downwards? That would be nice to know the price threshold for when your moving average flips from bullish to bearish. I think that'd be useful. So I'm thinking about maybe building that for guys in the trading group, but you know, I have a more serious project that I'm working on that is finally coming to a head. I'm very, very happy about. Again, this was, you know, derailed rant on programming number 2 for the stream. We have now 4 central banks to go over, right? So Bank of Canada, they're going to be on hold. We are here looking at the Bank of England, and this is the Great British Pound. If they're expected to hold, see, a lot of these are actually dollar pairs. So maybe we should start with FOMC, right? So we know Bank of Canada is going to hold, Bank of England is going to hold, but FX is a relative game, right? So relative from pound dollar or dollar CAD, what's the dollar side going to do? So if we go over here to, I don't know, let's just stay here on the pound. April 29th, so the day before is when we get the FOMC decision. Okay. So FOMC is going to make their decision, and they are fully expected to hold as well. So FOMC is expected to hold at, call it 3.5. Bank of England is expected to hold at 3.25. Or 3 3/4. So they're going to have about the same cash rate. So there's no rate differential there, no central bank rate differential there. So inflation and growth prints are going to, and especially the growth prints, are going to be a more important part of the driver. It seems like I'm dropping frames a lot. Thank God I'm recording this, but I had to reset my router today. I have it connected to a backup power supply, and the backup power supply went kaput. So even though the power in my house was on, my internet was off. I'm like, what? What's going on? So now, after resetting my internet, it's like, it's been a bit intermittent. So I'm sorry if I've been dropping some frames here. What number? Oh, I just used the default Herald. What numbers do I feed into this thing? Though these are all the defaults. These are all the defaults. That's kind of another thing on indicators. Keep the best, generally the settings that most people will use as the damn defaults. If I have to open the indicator and I am forced to actually change a setting that I don't actually have to, because it's not something actually custom that I'm looking for, you know, make it so I don't have to ever touch these settings, right? Like if I want higher time frame daylight, I understand I need to pick a higher time frame, right? It makes sense. Oh, I have to go into the settings and change the to pick the higher time frame I want, right? Like make it very intuitive. But now, like stuff happens like that with like what you just did there, Herald of ASCII. Like, oh, that's a cool little indicator. What settings should I use on it? Like, because most people don't set reasonable defaults for most of their indicators, that becomes like a reflexive question that a lot of people ask, not just you, Harold, right? For my standard rule of thumb is if you're going to build an indicator, put some sensible defaults that you know most people are going to reasonably use and set. And then let people who want to play around, who want to customize or optimize for a particular thing, go ahead and give them all the settings that they need to do that. And in that way, you are able to get anyone who just wants to use an indicator and have it properly indicate something and just have the indicator just work. And then that way, us mere mortals don't have to go and talk to some expert to configure the 20 different settings that I put into these, there's a lot of settings in this indicator. Most indicators do not have this much settings, especially free indicators. And this was built way before all the AI stuff. So this is all not AI stuff, but they definitely have used my indicator. They've definitely used this in AI training. So, I'm happy to contribute to building, helping fund the AI whole there. Not fund, but, contribute to it. So FOMC is expected to stay on hold. BOE is expected to stay on hold. It's going to become, depending on how pound dollar is going to go, based on energy prices, so mostly inflation, and then growth-related prints. And we're going to be looking, services will hold up quite well because, don't get me wrong, there's still energy-related impacts on services to an extent. But it's not as significant as what happens to manufacturing. So maybe the composite will be more interesting to watch for the PMIs. The PMIs composite will probably be interesting to watch. I know we got flash PMIs, and we can check out the flash PMIs actually. Press S, say global. S&P Global press releases. I have them here open on another chart. There we go. Check this out. Those are the thumbnails there. S&P Global Flash UK PMIs. This came out literally yesterday. This came out literally yesterday. So let's see here. Please tell me yes, it's Chris Williamson. All right, the UK economy has gathered some renewed momentum in April after the initial impact of the war in the Middle East caused growth to stall in March. But the upturn comes with a catch. The improved rate of expansion is in part a reflection of a short-term boost from a rush to secure purchases ahead of feared price rises and supply shortages linked to the war. Okay. Business confidence and employment have also been dragged lower by the ongoing conflict, boding ill for growth to weaken in the coming months, just as price pressures intensify. Okay. Now look at this, Bank of England expectations. The survey highlights the difficult choices facing policymakers at the Bank of England. The spike in price pressures will add to calls for rate hikes to dampen inflation, but the bank will need to carefully assess the degree to which economic growth might weaken. While April's PMI is indicative of the economy rebounding from a flat picture in March to, that's a pretty slow growth rate, but a 0.2% quarterly growth rate. The details of the survey hint strongly that this pace cannot be sustained should the crisis persist. See, this is why we read these things. This is why this stuff is helpful and why it's important to know where to get this information. Let's see here. Manufacturing production returned to growth in April for the UK. Okay. So let's see here. Oh, check it out. UK manufacturing PMI. It is on the up and up. I wonder how much higher this is actually because of supplier delivery times. Oh yeah, and you can see input prices, output prices are going higher. And then services inputs and services prices charged are also going higher. Let's see here. Okay. I'd say it will be fairly reasonable to expect, not next week, but this week, maybe some lower pound. So not necessarily next week. You know, the flash PMIs look good here for the UK. And actually, you can probably correlate this bounce right here to the release in the flash PMIs. So let's see here. When did these come out? 8:30 UTC. So they came out right here. So no, the PMIs did not help when you actually look at when these things were released. So the information was not incredibly helpful. And then we had this nice low volatility end of week rally. Wasn't that nice? And quite unusual too. Usually you top out for the day here on this particular bar. And you can actually see a lot of people sold on this particular bar here. You can see the big top wick, right? So this is also from, we can maybe make this a little smaller. Yeah, it's a little bit more appropriate. Yeah, even then it was saying, hey, most of your tops for a day, you know, looking at a 1 hour chart, so however much data that is, going back into the past, when your low for the day occurs around here, this is where most of your tops for the day occur. Now, we did ultimately end up reaching these prices, but we didn't reach it at the correct time, right? This, between here and here, is when we were expecting to actually reach those prices. We didn't quite reach those prices. But we did, well, we didn't quite reach these prices at this time. We did reach the actual price. But you can also see why now I'm like, okay, just have a moving average on your chart. Just have a nice moving average on your chart, right? Because you can see how it's like, okay, we're now bullish. We're bullish. We're staying bullish. We're bullish. We're still bullish. Okay, we're bullish. We're still bullish. Just having something to simply tell you, like, okay, yes, you are not crazy. Price is currently trending down. Yes, you are not crazy. Price is currently trending up. Like, isn't that a nice thing to have? It's such a straightforward thing. A lot of people, though, look at this and they're like, okay, I can just look at the chart and clearly tell without that it's going up. I'm just saying it's a little less thinking you have to do. Instead of looking at the prices on the chart and then trying to extrapolate whether it's an uptrend or downtrend, I mean, you can reduce it to, is it up and to the right or down and to the left? Sometimes that's easy, but what about this? Right? This choppiness. That's not so easy. Right? And just being able to tell, okay, that's incredibly choppy. There is definitely no trend there. And then you start to see some follow through, right? Yeah. That was kind of a nuts bar there, huh? So going into next week, I'm going to be on the side of probably stronger dollar, depending on The expectations more so on the Bank of England side. And then how growth actually prints. We have to actually see how growth actually prints. Okay. We also have Euro. The ECB is meeting here. ECB decision. And then we know that the Fed is meeting over here on the 29th, which is the day before. Let's see here. Do we have flash PMIs also for the UK? Or not the UK, for the Eurozone. Yes, we do. Okay. Eurozone is facing deepening economic woes from the war in the Middle East. April's flash PMI moved into contractionary territory for the first time since late 2024. Signaling a 0.1% quarterly rate of GDP decline. Oh, so if we go and we check out something like Euro, Great British Pound, this pair should be down, right? Yeah, check that out. Check that out. It's just been down, down, down. And there's your peak, 9.23% probability. That's your peak. And when you do top out for... Just adjust that real quick. And then when you get your top for the week, somewhere in this little red box, most of your lows either occur here or around here. So it was very easy just to say, okay, at least from here to here is like your most conservative, 40 pips from here. You could be targeting more. And this time we just didn't get that. But given the central bank decisions that we got, ECB is also expected to hold, and ECB is currently at a lower rate. They're at 2%. The pound is at 3.75. Yeah, it's pretty straightforward just on rate differentials alone to say that that's in favor of the pound appreciating against the euro. And then yield spreads say what? Oh yeah. Yield spreads have just been absolutely killing it. Yeah. Yeah. So, given today's top, wow, that's a big distribution. I don't think we'll be hitting these dots here, but man, those are some bearish yield spreads. That does not look great, and it didn't look great over here, and that was the primary expectation. And I think right around here, this is actually when we got the ceasefire stuff. Yeah, this was all the ceasefire stuff. So that reversed the yield spreads. That's a geopolitical thing. Yeah. Okay, what other central banks were there? SNB. So if we look at something like Euro Swissy, SNB is at 0. So Euro Swissy, I'd expect to appreciate. Yeah, we don't have PMIs for Switzerland here. Let's see here. Anything else? So that's Flash France, Flash India, a Global Flash Japan. Oh, and then Australia. Cool. Japan, are they actually meeting? Yeah, they're also meeting on the 28th. Hold at 20% odds? Oh, yeah. I was... Is that correct? They're expected to hike next meeting? No, they're not necessarily expected to hike at the next meeting. I'm pretty sure. They're expected to... I think it's a cautious hold. Let's see here. BOJ. Yeah, pricing for a rate hike at end of April has according fallen from 55% at the end of last week to 16%. Okay. Rate hikes are unlikely to be eliminated, even though they have been pared back in a significant manner. So rate hikes later. Rate hikes later. Rate hikes later. So let's see here. While services companies reported weaker growth of both activity and sales at the start of the second quarter, manufacturers signaled the steepest rise in output for over 12 years. Wow. Amid a solid uptick in new work. There were reports that some manufacturing firms boosted output due to concerns and uncertainty surrounding the war in the Middle East and the potential for further supply chain disruptions. The latter contributed to not only a much sharper rise in costs, so higher inflation, but the most pronounced increase in average delivery times for manufacturing inputs for nearly 4 years. Yeah. The war in the Middle East was a key factor in dampening optimism. Okay. So softer growth, but still positive growth in Japan. But higher inflation. Yeah, you can see manufacturing PMIs going up, and services PMIs starting to go down. So slower growth in Japan. Average input costs face. Yeah. Overall employment has now risen consistently for just over 2.5 years. Signs of capacity pressure persisted. Oh, so wages might be going up. However, as levels of outstanding businesses increase for the straight month. Okay. Overall new businesses also expanded modestly. Started the second quarter. Underlying data indicated that new exports fell for the first time in 5 months at services companies, but expanded at a quicker pace at goods producers. Okay, so they slipped, but they're all still good so far. So if we now check out, let's say Aussie Yen, and now we'll do the Aussie side of things. You can see Aussie Yen has just been a total beast. And I see Australia is here. Flash PMIs for Australia. Greater outlays on fuel and freight also pushed cost inflation to its highest in just under 4 years. Okay. Despite growing price pressures and persistent weakness in domestic demand, latest data saw output stabilize following March's decline. Okay. So it's still in pretty bad shape. Let's see here. Oh. The composite is at 50.1. Up from 46.6 in March. That's great. So the rate of change difference for Australia here is really fantastic. Okay. That's great. Let's check out dollar yen real quick. Yeah, we're setting higher expectations for it still. So if FOMC stays on hold, yeah, I would continue also to expect still a higher dollar yen. I still don't necessarily see a reason why not. Especially if wages get negotiated higher due to higher inflation, and the inflation in Japan is way, way, way more impacted by energy prices than in the US. You know, the US still is impacted by energy prices. But relative to Japan, you know, if the Strait of Hormuz is still closed, they're barricaded for, I don't know, another 2 months, that's just going to continue putting pressure on inflation much more heavily on the Japanese side of things than actually a lot of other economies. Yeah, Harold, I don't know where you were saying front loading for, but there's a lot of front loading on the UK side of stuff. There's a lot of people front loading buying energy in the UK right now. Okay, so we've done a few cross pairs. So 1, 2, 3, 4, 5. The RBA is meeting May 5th. So that's over here. That's the following week. And they're expected to hike. That's as of their last meeting. So maybe not necessarily Aussie dollar. Actually, Euro Aussie. Yeah, this one looks good to me. So if the ECB stays on hold and the RBA hikes, don't get me wrong, they'd have to be hiking into a slowing economy, but based on the flash PMIs, that doesn't seem to be the case. See, if you hike into an economy where the growth is going down, generally speaking, against, like, let's say the US dollar, that currency actually continues to weaken. But in a scenario where growth is doing really well and inflation is going up and your central bank is hiking, you got to find a good cross pair to look at that's pretty flat and stable and isn't changing their policy much. And generally, something like the Aussie tends to appreciate. I can't, say always or for certain that it will happen, because it doesn't always happen. But based on my understanding, that's kind of the play, right? Next week, you have ECB. I believe they're on the 30th, actually. So let's move this to the 30th. ECB decision. That's decision. And then over here on May 5th, you have RBA. So we can set something along these lines of expectations where we go probably into a more positive week. And then we can say apply green, 2026, 424, 21, 57. And then this following week, post RBA decision, if they actually hike, and we can just copy that on hike. There we go. That would be my expectation there. So there's probably 100 pips on the table there, depending on where you get in. Maybe a bit more. That would be what I see. Hey, James. Your odd more sells. Your odd has been a great short for a while. It sure has. Been a long sell. Look for a bigger correction to upside. A long sell? I mean, it could. I'm essentially expecting a more nominal sideways-ish. Maybe I have a bullish, a slight. I'm expecting a positive drift, a slight bullish drift next week. I'm not expecting things to go all the way up into the moon. But just looking at central bank rate differentials, and then also taking into account these flash numbers. See, if you just look at the central bank rate differentials, it's not enough in my opinion. That's why we're bringing up the flash PMIs here. So if you look at Australia has done pretty well. They went from 46.6 in March to 50. They're back in growth, at least on their composite. And the Euro area, the Eurozone, is now signaling a declining GDP. So this isn't so great. This is not so great. Now, they're still in positive territory too, right? But they had a smaller rate of change here. If we go back to, that's Japan, this is Australia. They went from 46.6 to 50 versus 48 to 50. So Australia had a 4-point recovery here. Eurozone had a 2-point recovery. Now they are a bigger economy, right? But let's see here. Services above 50, manufacturing above 50, output index 48. Flash manufacturing PMI, so output index 52. Yeah, so output not so great relative to Eurozone's doing better. And manufacturing's doing good there, and services had most of the rebound. Their manufacturing actually is better than Australia at the moment. Manufacturing is still in contractionary territory right now. Again, most of the rebound was for Australian services. Which makes sense. Makes sense. There is a commodities crisis going on right now in Australia. Let's see here. Yeah, it has sold for a long time, yeah. I heard news that BOJ will intervene. Yeah, 160 is about the level, but there's now been a handful of reports saying the Bank of England, the Bank of Japan might let it go past 160 if inflation also stays quite elevated for a little bit. The expectations about 160 holding are going lower. And the expectations that the Bank of Japan might, or the Ministry of Finance, might let price stay above it for a bit. 165, some people are now starting to develop the expectation that 165 may be the new line in the sand. And you'd get that if you read the notes over here. But yeah, look how bearish that has been. It's 1,700 pip move from last November down to March. It's just been straight down. But if I hide this real quick, if the interest rate differential is enough, you might... It's not just the interest rate differential, it's also the growth, the rate of change of growth, and inflation. Will inflation in Australia be worse than inflation in Europe? Well, I think the answer is probably already yes if the RBA is hiking, right? So then it becomes, can Australia provide more growth than Europe? And when we look at the flash numbers, it looks like Europe is in a much more solid position, especially on the manufacturing side. And they also didn't move as far down on the services PMIs. So if we scroll down here, services PMI business activity in blue is not so great. Manufacturing is up, on the up and up. But yeah. Confidence in the year ahead outlook for business activity continued to wane and hit a 21-month high in February. Sentiment in April was the lowest since November 2022 and comfortably below the averages, or the average since the series began in 2012. Services optimism was the weakest in 3.5 years, while the manufacturing sector confidence dropped to a 17-month low. So future growth expectations are falling in Europe, but relative to Australia, let's see here. Showing stability in business activity and stronger job creation. Total new business placed at Australian businesses decreased for the second month during April, or in April, as raised level of client uncertainty amid the heightened geopolitical tensions dampened sales. Well, there was evidence of soft domestic demand. Export orders increased again. Panelists reported higher sales to North America, Asia, and New Zealand in particular. Although still positive, business sentiment retreated to the lowest in 2.5 years in April, with firms concerned over the cost and demand environment. Nevertheless, there was a stronger increase in private employment at the start of the second quarter, which led firms to divert resources towards their backlogged orders. Okay, so I think that's looking at a bad situation with rose-tinted glasses, the ways that this is described. So it seems like Australia is working with what they can work with, and either, I don't know, it seems like they're doing okay. It doesn't sound like they're doing great or even particularly good, but it doesn't seem like it seems like they're plugging holes in the ship right now. They're plugging holes in the ship. And it seems like they're plugging those holes and bucketing out the water of the sinking ship quite effectively at the moment. Compared to what things progressively rate of change. The Eurozone is currently taking on water while while they've been taking on water, they've been getting more water out than they've been taking in recently. That's the way I'm currently reading this. Are you guys kind of reading it the same way? No. Yeah, you're right. Well, iron ore is really dependent on China because when oil prices and coal prices and when energy prices go up, the foundries that take the iron ore and refine it into metal products, it costs them more money. So it's not so straightforward to, the price of iron ore actually sometimes goes down when energy prices go up because the amount of people who can actually compete profitably in the metal space and manufacturing space in metals and actually refine ore into a metals product, the number of those businesses that exist go way, way down. So a lot of foundries close or take a reduced amount of business, or they only do business with people who they already have contracts and future obligations with to take in raw materials at lower prices that were contractually agreed to before. But a lot of those contracts went poof because of the Strait of Hormuz situation. And what was the term used? Essentially, the contracts were nullified due to extraneous situations with the Strait of Hormuz, rapidly increasing energy prices. I'm pretty sure a lot of people are going to be taking the court over, whether or not it was justified to nullify various contracts. But essentially, if a producer actually upheld their contract and didn't nullify it, the few foundries that are still getting relatively cheap what they paid for iron will keep operating until they run out of iron to actually refine. Meanwhile, the big players in the space are going to be willing to just raise their prices for their products, for their steel and iron products, to afford, and they'll just pass on the higher energy costs to their customers. So the issue isn't the raw iron ore. There's actually now technically more supply of it. The issue is the refined material, because you need energy inputs to make that. It's kind of the same thing with fertilizer to a degree. So if we go to the commodities section here, and this is urea. Check that out. Urea prices have just gone through the roof. Up 32%. And then what's this? Whole milk. Yeah, this is a New Zealand thing. Yeah, you can see whole milk prices. So New Zealand is not doing so great at the moment. So let's see here. This was... pretty sure this was Epic Fury. So Epic Fury started here, and they're currently down. So New Zealand is not doing so hot. Not doing so hot. Okay. TTF. Oh, that's nice. Nat gas went down a bit because this was Operation Epic Fury. So nat gas almost went up 100%, 91%. And we're currently sitting at 37%. So energy prices for a lot of energy prices in Europe are nat gas dependent. So the fact that this came down quite a bit is nice to see. Quite nice. Nice. Right? Uh, what else can we check out? There's also gold. I saw that expectations for gold did decrease. Because after this fall off, gold's been doing a whole lot of nothing. Right? Whole lot of nothing. But yeah. I still got faith in gold. It could, especially since inflation is going up. The issue is just on the demand side of things. When growth is going down and inflation is going up in a lot of places in the world. Yeah, gold can do well in those environments, but gold does even better when growth is up and inflation is up. Now, in that scenario, there are other opportunities, like in equities, that typically outperform. But gold does really well in that regime of positive growth, positive inflation. Because people will buy more gold as they buy more equities as part of portfolio mix strategies to hedge inflation costs, or to hedge inflation changes in really strong rises in inflation and dips in growth throughout that regime. And then copper. Dr. Copper. Dr. Copper. How are you today, Dr. Copper? Feeling much better, because this was... Copper fell pretty strong after Operation Epic Fury, and now it's pretty much completely recovered. You can pretty much tell right when they started having negotiations. It was this Tuesday? Yeah, it's right around here. I believe negotiations were right around there for the first ceasefire negotiations. Okay. That's commodities. Let's check out, let's just go straight to NQ. Because a lot of you guys are trading NQ right now. It's just phenomenal. NQ has just been taken off like a rocket. It's up 20% from the low, man. New all-time high. It's just been an absolutely stellar run. And if you've been a buy and hold guy, if you just have some of this in your retirement, it's just been smooth sailing. If you have it some in your Roth or 401k, right? There's such a thing as net worth, and not trading the entirety of your net worth, right? Man, it's very, very nice to see this, for me, seeing this go up and to the right. That was a 10% drawdown, and we've recovered the entirety of that since then. Yep. And I'm pretty sure this is like, yeah, you don't typically see this kind of move. That is an insane move. It's a historic move. Absolutely historic move. So most months are not like that. I guess the pivots also are going to show something like this, yeah. You've never had a close in the history of NQ above R2.5. So even though this month is generally pretty bullish, you can see most closes based off pivots for the month of April are, you could say, above R0.5 in this area, right? A lot of closes are in this area. We're going to uncharted territory here. If oil continues to go up, gold will fall. Well, to a degree, right? To a degree. I don't know if oil will continue to go up. It just depends on if the Iranians continue attacking Qatar and the UAE and Saudi Arabia, right? I mean, this definitely can go higher, right, James? It doesn't have to correct. But I am starting to see something a little bit by looking at this here, and that's something that I like to call the hockey stick. So let me, I don't know, get an arrow for this. Here's one rate of change. And then we can hide that. And then here's the next rate of change. So that's what I mean by the hockey stick. You have one really strong rate of change, almost vertical. And then you teeter off like that a little bit. And then you either have at that point in the future your pullback or some sideways movement and then continuation or another pullback from there. So I need a bit more time to, in my book, to actually figure out whether or not this is, just because something is making new, whenever equity markets are making new all-time highs, it's not usually the best time to be trying to catch shorts. Yeah. Well, the dip was all the way, around here, right? There was some good money to be made, even if you're just trying to get long post the dip. This has been a pretty strong rise up. And yeah, Trump's been trying to pump the markets. He has been trying to pump things up. And I mean, based on this, he's doing a pretty good job. Because the rest of the world's equity markets aren't doing so hot. Let's actually see which equity markets are performing the best today. That would be Japan, the NASDAQ, right, the Nikkei. S&P 500. So far, so good, right? I think that was just an example drawing. I don't know if I actually did that. Yeah. And then this is Latin American stocks. Then this is the Euro 50. IMV, which is also Latin American stocks, not doing so hot. South Africa, not doing so hot. Actually, I kind of want to check out Australia. TSX, I know that's Canada. Canada's doing fine. Canada had the same, actually had an earlier rise up ahead of the NQ. Yeesh. New Zealand's equity market has just been getting beat down pretty harshly. Wow. The Australian stock market, it had its bounce too, but it's not doing as well. It's not doing as well as some of these other ones. And this is also Australia. SPI is also Australia. So Australia is currently the biggest loser at the moment for the day. Yikes. Yikes, yikes, yikes. One thing I do want to check, though. Australia's, their rate is at 3.85. So if they go back to hiking, 3.85, and you're getting long Aussie against the euro, man. This could end up being a... Well, actually, no, this is euro getting beat, right? Yeah, this is... Yeah, so this might continue... Yeah, so I misinterpreted this. I was thinking this was Aussie Euro. Okay, so I put this expectation in backwards. Yikes. I am sorry about that. Yeah. Now, who knows? Maybe the ECB will get growth to look really, really good, but this is, yeah, my bad. My bad. I need to flip this. I hope when I go back and I re-listen to my commentary, when I was saying, oh, you know, I think Australia is going to be doing better, I hope that it's not, you know, that was kind of weird. I put in green arrows and up arrows. I was thinking that Euro was doing really well here against Australia, but no, it was not. Yikes. Also, it's, you know, so long you're changing your expectations on the stream, I don't see a problem with just this little fix. Yeah, so sorry about that. I thought I was setting my expectations in favor of Australia by drawing those green drawings, but I wasn't paying quite close enough attention. I thought I was doing odd Euro. Yeah. So that would be kind of my expectations. It's probably going to be more sideways-ish than down post RBA, especially if they do the hike. If RBA hikes, this right now, this drawing makes sense, right? Yeah. And then New Zealand. Oh, that's a day, April 8th. Okay. So we'll have to make sure we update that one. Anything else here? We can check out EuroCAD. That's been an interesting one. Euro has been doing particularly well against the Canadian here. And they're fully expected to hold. I wonder, do we have flashes for Canada? Yes, we do. That's global services. So we don't really have the latest data for Canada here at the moment. What's the comment say? Another challenging month for Canada's service sector, which signaled during March. Nonetheless, the present business environment is clearly challenging, with firms reporting a steep increase in their operating expenses over the month, driven mainly by increased fuel and transportation costs. However, given subdued market demand, firms' own pricing power remains restricted, leading to only partial pass-through of higher costs to clients. Ooh, so they're probably in for a higher hit on growth. So EuroCAD, even though it's pulled back here a tad, might end up continuing to do well here. And let's make that one green. Oh, 4, 24, and then 22, 26. Oh, that's UTC. I need to put it in my local time zone. Shit. Oh, man. All right, let me... Like, that's kind of late. 15, 26. There we go. And I'll go back and update those other timestamps. Swissy is weak. Yeah, we can probably look at a couple more Swissy pairs here because they're not meeting till June, and they're completely expected to stay on hold right now. So, dollar Swissy. I didn't see any PMIs come out here for Switzerland. Let's see here. I think I actually just want to use my probability pivots here real quick. So it's a pretty bimodal month seasonally. Either closing closer to R1 here or just before S1 here. So it's a bit, when it's a bullish month, dollar's considerably more bullish, and then when it's a bearish month, it's more on the conservatively bearish side. So more upside potential on the bullish end, seasonally. And if we look at likely lows, probably around here, right? A bit for next month. Let's full screen this. Oh, hey, guys, check that out. Here's your probability weighted pivot low for the month. And look at where the low showed up for the month. Oh, good stuff. Good stuff. And next month's low is actually in probability weighted pivot low is in a similar spot. Now let's look at the highs. So it was clearly bearish, and he also had expanded pivots. So yeah, I didn't quite hit that. Yeah, I would want to set up an alert for S 0.5 here. Come on. Set up. Where's my alert? I'm doing the alert hotkey. All right, let's see here. Add alert. What the hell, Trading View? Where's the little pop-up so I can make an alert? Anyways, can I set an alert there? Nope. I wanted to set an alert for S 0.5 and R 0.5 for the month ahead. Because you can actually see what I mean here by when you go bullish and risk on for dollar franc, it goes usually past R1 here. Versus when you look at the low odds, they are skewed closer to this S1 spot. So, yeah. It seems a little bit more straightforward to be on, seasonally be on the bullish end of things. And then you have, so that's what these closes are representing. Sticky closes. Which means price, if you go down and then up, you end up by the end of the month essentially just going sideways. And then vice versa for the other scenario where you top out somewhere around there, you bottom out somewhere around here, and then you close essentially sideways. So when I was pointing out the quote-unquote bimodal peaks, I was looking at this spot up here and this spot right here. So this would be the bearish trade plan, and then... So I think for both of these trade plans, you just got to watch for crossing R 0.5 on the month, next month. Isn't that nice? There you go. There's the power of the probability pivots. There's the power of the probability pivots for you. And we can delete these two things here. Okay. I still wanted to do a yen pair. I know New Zealand isn't doing so hot right now, but it's doing pretty good against the yen. And next month, it's also a bimodal setup. Look, this thing here is unimodal with a bit of a bump here at the tail, right? So you got that one and that one. Over here, this month, it's a lot more exaggerated, right? You have 2 peaks where you get closes. So when I'm looking at next month on New Zealand yen, let's say, based on what we know about the yen right now, let's say I am going to try and short the yen, and I'm considering maybe shorting it against New Zealand. So buying New Zealand, selling yen. That does not look so great. In my book, this doesn't look good. Like, this is what I like to see. So here's New Zealand yen for the current month. This is what happened, right? We had our probability weighted pivot. It got hit. That's the probability weighted pivot low. Price crossed it. Good. We got close to this thing. And the odds were pretty well concentrated seasonally around this spot here. So you could probably go to a weekly pivot, and this thing has replay mode. So you can go into replay mode here on a 12-hour. And yeah, there you go. Probably had to take a smaller shot here, frankly, because this would have been the probably more ideal spot to catch it. And it's also at a psychological number, 90, right? But once this bar came along, it's time to just totally flip. Yeah, there you go. Probability weighted pivot for high for the week. And now you're going into no man's land territory we haven't quite been before. Probability weighted pivot high up there. Nope. Didn't quite tap it, but we did get into the nominal zone here, which is where most of our odds were. If we replay the mode, sucks we didn't quite hit it, but more than 50% of the time, your top 4 the week is between our 0.5 and our 1.5, this whole area here. So pretty reasonable to say, like, okay, now that we're towards the end of the week and we're still trading around here, fairly reasonable to consider getting out. You can also look at the closing odds to see if we actually do end up closing up here frequently. Oh yeah, this is fine to say to get up, but this is why you got to kind of flip through the odds, get used to it, and get in the trading group so you can share charts and discuss these things in some group meetings. Because everyone then looks at the same odds. But yeah, for next week, pretty good odds of closing bullishly. So I wouldn't mind setting up maybe something like that, if it'll give it to you. Yeah. I'd be pretty okay with that. So what's that? Bottom of the range around here and then to the top of the range. Probably going to be on the more conservative side. There's a chance that you just get a wick that goes down to here. Maybe. So this is where being proactive on the position sizing comes in. Yeah, and that can really eat up your margin too. Yeah, and that's not necessarily the best. So you got to get a deal on this. You got to get a deal on this below S 0.5, or with after this little dip right here, buying at the cross of the, buying at the breakout of whatever high was made at the beginning of the week. Right? Something like that. And then that would be the other trade. That would be the more conservative setup. And then you could probably set it to like that. But this has to be much lower size because this stop has to be much larger to accommodate for the volatility and the potential drawdown here. So maybe this one's actually the smarter trade plan. Okay. So we did some technical work. Oh man, look at that. The probability weighted pivot high for the month. Hey, 33% of the time, the top for the month is around here, guys. Wouldn't you like to know the probability that we top out for the month is really, really high around here seasonally? And then we trade up there. Actually, wasn't the probability weighted pivot low for this chart also down here? So did we go from weighted pivot to weighted pivot? Yeah. That's what we did. We went from this weighted pivot low to this weighted pivot high. Guys, get into the trading group, man. I don't need to sell this. I don't need to sell this. Yeah, and then when you want to go over trade plans on particular assets, we can go ahead and review the stats and look at all the different things and check out the settings. I still have a few updates that I need to do for probability pivots. Like, you know how right now we have to change this setting constantly? We have to go into the settings, change the data source, high-low close, right? I think it'd be nice if there was an option, a fourth option here, that says all. And then it would actually show you, okay, here are the odds of finding your high, your low, and your close here in this area. And then it would show the probability weighted pivot, high, low, and close. And then that way you have all the information right there on your chart. It's a bit more information overload. So the default's always going to be just showing you the closing odds, which also imply some kind of pullback here, right? You know, you might want to be, based on the odds for next week, seems reasonable to be bullish, but based on the odds for the month are pointing down here. So I'd set up, actually, remember how we did the contingency plan, right? It was like, hey, there's a big chance of actually seeing a larger drawdown right off the bat. So we just got to be careful. Entering right off the rip, be best to more conservatively enter at a trade of a higher high. So if you don't get the higher high, guess what's going to end up happening? The close is probably going to end up at these monthly odds, these monthly levels below R1, closing the month below R1. That's at least how I'd see it. Man, the stream is kind of laggy, huh? Man, a lot of you guys are watching through all the lag. I appreciate it. Sorry about that. Nothing I can really do today on that front. But I am sure that the lag is going to go away when we do this in the next stream. Okay. Pretty much just going to ask once because I know the stream's been going on for like an hour and 40 minutes. And I know most people aren't going to watch this recording because, watching streams that are like longer than an hour is a pain in the neck and a huge obligation. So for everyone who's here right now and it's live, like now's the time. If you got questions about the indicators or you got questions about assets you want me to look at, or if if you have any questions about I don't know, the trading group or the research that we do in the Plan the Profit Discord, like here for the Outlooks channel or the research forum, this whole thing. Look at all these threads that we're following. Look at all these topics. And then after the stream, I'm going to be hanging out here in the voice chat. So if you guys want to hang out with me after the voice chat, or after the stream, you can hang out with me in the voice chat. So we can close that because we're not going to use that. We can pull up maybe like DXY. So I'm going to do a chart here on DXY. So if you guys got any last requests or any questions, like I'm going to give you guys like 5 minutes to type out whatever it is you want to request or ask. Because I'd rather not go on for like 2 hours, you know. Do you have a view on the Mexican peso going forward? General Banxico will get a lot of press. Yeah, you're right. MUFG and Wells Fargo have outlooks that cover peso. Wells Fargo will try to cover it weekly, and MUFG covers it in their monthly FX outlooks. So those are the two things to watch. Those are two good, consistent places you can get decent Mexican peso analysis. In fact, I can do a little demo here. We're going to be getting another monthly MUFG outlook shortly, huh? Yeah, I actually don't see their monthly outlook here on this page. Oh, there it is for April 1st. Let's see here. So Mexican peso, these are the forecasts Q2 2026. So they're forecasting 18, 17 and 3/4, 17 and a half. So end of year 17 and a half. Dollar MXN, right? Yeah, it's pretty bearish seasonally next month. And they are already past 17 and a half. The forecast was for 17 and a quarter, so like somewhere around here. So those were just the monetary forecasts. If I go back, I have to let me actually see if I can open this. Let's see here. And then MUFG. And then do I have the latest one? Oh, actually, I don't have this one. Okay, that's good to know. This would be for oh my god, did we actually run out of music? Oh no. We just have to seek it forward a bit. Okay. So that's the MUFG outlook here. And then we search MXN. There's the forecast table. There we go. There's the Mexican peso section. So in March, the Mexican peso. In March, the Mexican peso weakened against the US dollar. So this is the Mexican peso getting stronger here. And this is, they were talking about things here at the very beginning of the month. Let's see here. The peso selling momentum. Let's see here. Sorry about that. The peso selling momentum was then reinforced towards month end with the decision of Banxico to cut the key policy rate. This has certainly increased downside risks for the peso, given the inflation risks from the conflict appear to have been played down by Banxico. Statement from Banxico indicated the belief the headline inflation was, quote, still expected to converge to the target by Q2 2027. Given the high level of uncertainty at the early stages of the conflict, holding rates steady was what the markets expected, although markets' expectations were quite divided. In addition, Banxico signaled the potential for a further cut. So, trade uncertainties lie ahead, with China warning that it could impose retaliatory tariffs on Mexico after Mexico's implementation of tariffs on Asian countries in order to appease the U.S. And then here's a bit on the USMCA. Yeah, that's still happening on July 1st. Given the risk of some deterioration in risk conditions over the short term, we see scope for the dollar Mexican peso to extend further higher, although most of that gain would be reversed by end of Q2 and beyond then, because we see scope for dollar peso to renew in modest decline into the end of 2026. That's mostly a dollar bearish thing. Okay. And this is Saudi. So yeah, there you go. So they cut their key policy rate. So let's see here. We don't need that anymore. Let's look at the ranges. Now, the yield spreads are still quite positive here. Short-term side of things, they're not looking so great, but they're still holding up compared to a week or a month ago. So if inflation rises significantly faster in Mexico, they are having energy issues. I'm in agreement that you could end up seeing a higher dollar against the peso. And then probably past the second quarter, you essentially trade an established, some kind of established range potentially. That doesn't, what MUFG outlined there does not sound unreasonable to me. And then James, you're talking pound dollar, pound yen. I'm pretty sure we did Great British Pound Euro, but we'll do pound dollar. Yen is very straightforward. It's pound yen is probably going to do quite well. The yield spreads are kind of all over the place, but they're fairly negative. I kind of expect we'd start to see some dollar strength here against the pound. That's just my gut feeling here. Going into the FOMC decision, yeah. All right, so seasonally, what's the deal? It's a crack shot as to whether or not we're actually going to close up here. Pretty decent odds that we've already topped out, but you know, if you get any kind of dovish, I don't think that the FOMC is going to set any kind of dovish expectations. I think they're going to say that they're firmly on hold. Because even some of the more dovish members on the FOMC board have turned much more further neutral and pushed back their rate cut expectations, at least into the end of the year. So it makes sense to me that the main driver now is going to be relative growth and inflation for these two countries. And I would argue that the US is probably going to do better. They're probably going to do quite well with all the energy that they're exporting, right? All the gas, all the oil. I think the US is going to be doing pretty good. So let's look at the high end here. Let's look at next week or next month. So most of your tops come in between central pivot R1. And you have pretty expanded pivots. So for dollar bulls, central pivot R0.5 seems like the entry zone. And then on the bear side, yeah. For pound bulls, you got this area between S0.5 and R0.5, depending on how bullish you are. But it would have to come post BOE decision. You would need one or two economic prints, essentially, to confirm. I would focus on whatever in the first 2 weeks, the first couple of important inflation and growth economic prints that occur in the first 2 weeks of May, to set a really a much more concrete expectation. Because otherwise, this would be kind of the target for bears below S1. So for a bear, for a dollar bull, it'd look something like that. That's what a dollar bear would probably be, a dollar bull would look for. And it's a bit more variable. If you're a pound bull, it's something like this. Or something like this. And actually, I kind of want show stats. Price range. Change in pips. And then time, date. Save as green. Oh, green. And then actually, if you start trading up here, it's not totally unreasonable to take it short into a close. But it's pretty uncertain. So it's either going to be like a long drag like that. That'd be kind of what I'm expecting on if you're a bull to do. It's a lot more straightforward if you're a bear to be doing something like this. So we'll color that red. Timestamp it. And set that one to blue. Coordinates, text, visibility, style. Oh. Blue. Oh yeah, change in pips and date and time. There we go. Blue. There we go. That would be the nominal trade plan based on probability pivots. And check that out. You have a peak right around here. You got a pretty fat spot to find your low. And then if we look at the closing odds, hey, check that out. There's a peak in your closing odds. The seasonal odds are lining up with the non-seasonal odds, which is a good sign. Some would call that confluence. Oh, man. Okay. Well, I said I didn't want to go on for 2 hours, and look, I've crossed the 2-hour mark. I have crossed the 2-hour mark. Okay. Well, you guys asked some good questions. I didn't do pound yen. But I went ahead and did pound dollar for you there, man. And I time-stamped it. So in future streams, so the streams are right now every Friday. And then when there's a big market moving thing, I'll do ad hoc streams and I'll make announcements on the Discord in the streams channel. And then in YouTube, you'll get notifications, and I'll also be making YouTube posts. So if you have the bell and notifications on and all that, you'll get, if the schedule for the streams ever changes, you'll get a post, a YouTube post that gives you an update on what the new schedule is. But right now it's every Friday after the market close. So around 2 Pacific, 5 Eastern US. And ad hoc streams, and those can be in the morning, late at night. Can't really give a heads up on them because they're ad hoc. So I'll say thank you guys very, very much for watching. Thank you, James and Harold. Thank you, Sean. Thank you, Ani. Thank you, everyone who's watching the recording, the 2-hour recording. Oh my god. You guys know where to find me on Discord. And if you're interested in the trading group, you can do a 2-week trial for it. To start off. Other than that, I will see you guys in a bit.